Hello and welcome. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. These are the top headlines that we're tracking at this hour. The market has gained momentum towards the last hour of trade. The Nifty trades about 10,600 with most sectoral indices trading with gains. CLSA's Christopher Woods advises hedging against another oil price rally and waiting for the election results before buying Indian equities. He also finds value in Indian 10-year bonds at 8%. Grasim reports a quarterly loss in its second quarter after paying an exceptional item for Vedanta Idea merger. The stock is now the top loser on the Nifty. And Yes Bank falls the most in 3 weeks after its non-executive chairman Ashok Chawla steps down from his post with immediate effect.
Well, good afternoon, viewers. And the question is, are macros improving at the margin? Before we start off with what the markets are doing, and the markets are doing well, by the way, just want to bring up the intraday of the rupee, the INR versus the dollar. If we can get the intraday from the Bloomberg terminal or just get the actual rate right now, we are at about 70.90. And look at this pullback. It's been a sharp pullback in the rupee. We're trading almost at the highest point of the day. It's an inverted chart, but essentially we've strengthened about 40 paise in the session today, which is quite remarkable, really. Not that there is a dramatic movement that has happened overnight in crude or otherwise, but just the fact that crude prices have come off and are stabilizing around these 65, 66 odd levels, I would guess is the reason why this would be happening. Also, what's happening is that FI outflows have slowed down quite considerably. We haven't seen very large outflow from the FI side for a number of days in the past 7 or 8. So that's the other factor they need to monitor. So the rupee very, very strong, 71.8950 as we speak at the highest point of the day. Okay, it's having its impact on the markets. The mid caps and the small caps too reacting, and the banks. The bank Nifty the last 2 days is leading the way, to be honest. So good today for the mid caps and the small caps too in the green. But the Nifty bank at 0.84% is really revving up and leading the charge on the index. Get the heat map up on the screen and just show you what's happened. I'll also talk about a certain mid caps, select mid caps will come up on the wall, and then Agam will bring you up to speed with what's happening in the F&O space. Maybe those stocks will coincide as well. But look at what's happened. First, the red, there are 2 or 3 names. Grasim on news, and we all know the news, down about 8%. Yes Bank, Ashok Chawla stepping down about 8%. India Bulls Housing, I would guess collateral sentimental impacts, so down about 5.5%. Aside of that, we don't have too many losers which are worth talking about. Look at the gainers. Titan continuing its merry ways, going there. Autos have bounced back today. So Tata Motors, Hero MotoCorp are a couple of stocks. Eicher is about a couple percentage points higher. Maruti is about 1.5% higher. So it's strong show by autos in the session today, and thereby certain other NBFCs and financials have done rather well. So good going, the heat map and the market breadth firmly in the positive. Just before I hand it over to Agam, 2 or 3 names that I do want to point out and will come up on your screen. Firstly, Vodafone Idea, and Grasim is not, Grasim is the impact that's coming in because of what's happening to Vodafone Idea. 11.5%, 36.80 for this stock. So under tremendous pressure in the session today. We already spoken about Yes Bank, but on the flip side, I think a couple of stocks that I want to highlight. Ujjivan Financial Services, some strong moves today post the results. So that's trading in or around the high point of the day, about 8% higher. So strong show by Ujjivan as well. And Jet Airways remains the stock firmly in focus. 2 or 3 is on a trot now. It's gained, and it's clearly surprising almost everybody. 276 and counting. Extremely buoyant trade for Jet Airways in trade. But Agam, maybe some of those stocks fall in the F&O category as well. I'm sorry if I stole your thunder.
No, you haven't. Actually, I do have a whole host of other stocks which are also in focus today. So, but before that, I'm going to talk about the Nifty, and let's start off with the futures there. And well, we have seen an advance on the Nifty 50 index right now, and in fact 3% increase in open interest too. Remember, we did start the day on a very flat note, and we've seen advances since, and we've seen longs too, and that explains the up move there. Coming down to the Bank Nifty futures too, what we're witnessing is more accumulation towards longs. Do remember the Bank Nifty was up yesterday as well, and this is well building on yesterday's gains, so advances there as well. The India Volatility Index, as one might expect given the fact that your indices are advancing, the VIX has fallen by around 2.5% to around 18.4. Now, coming down to your open interest distribution, I reckon nothing much has changed. But when it comes to your change in open interest, that's where you're seeing more writing towards the lower level puts, as you can see on your screen there, at around, well, 10,300, 10,400 puts. And, well, a little more writing along the lines of the 10,600, 700 calls as well. So this, of course, means that there has been a largely range-bound movement. Now, this is your open interest distribution picture, and well, this really hasn't changed considering 10,200 put has the max OI on the higher end. It varies between 10,800 and 11,000 calls. So that, of course, will keep changing, but for now, the immediate resistance will be for well at around 10,700 for as far as the Nifty is concerned. Coming down to stocks, I want to address what's going on with Page Industries, because this one's taken a knock of now down 7% and open interest is up 7%. You know, you may have find seldom that a day in which Page Industries has declined by the same amount as it has today. It's down, as you can see, about, well, I would say about okay, so it's also trading at a discount around 100 points, so watch out for that. Moving on, Apollo Hospitals. This is, of course, on the gaining end. It's advancing by 9%, 86% increase in OI. G1 Financial on the back of very strong earnings coming through, and also surprising the street, actually. About 27% increase in open interest towards longs, and Just Dial continuing its up move, actually, and so up another 6%. So 29% increase there as well. And do remember, there is a substantial accumulation in a lot of these stocks, and this really isn't the first week of November considering accumulation. So we're clearly seeing a lot of longs building in some of these stocks that I mentioned. And of course, I'm also going to watch out for Page Industries, which is buckling under pressure for the second straight day, if I'm not mistaken, right now, Neeraj.
Yeah, man, clearly the results pressure showing in on Page Industries in the session today as well. However, good time to get in a market voice. Vaibhav Sanghavi of Avendus Capital with us on the show now. Good afternoon, Vaibhav. Good having you. Thanks much for joining in. This is Neeraj here. You know, there is chalk and cheese behavior right now, Vaibhav, and you know, I'll try and tell you why I thought like that. But just before I get to that, are you guys in the buy mode right now, or are you guys in the wait and watch mode? Because we are not at those lows, but we are not substantially at the higher levels too.
No, I think to answer that question, I think deployment is a constant process, right? And with the unique ability of what an AIF vehicle gives to us, it's not that we get restricted to the amount of deployment equal to corpus. I mean, there is an amount that we can. It's a wide range where we can maneuver around. So yes, at low levels we were buyers, and we have seen some about 3.5–4% rally from those kind of lows. We are continuously evaluating opportunities to invest in, as we are structurally bullish on India's story over a period of 3 to 5 years. So we are on lookout for investments.
Okay. Now, the reason why I said chalk and cheese behavior is precisely because of what Agam was bringing about as well. The last 15 odd sessions, we've started seeing companies wherein even if the valuations are high, but if growth is hitting a bit of an air pocket, the market is taking cognizance of that, and the valuations are getting pushed down. I mean, it happened with Maruti, the management commentary about not being able to meet that 10% guidance for this year, or might be difficult. The stock has corrected 30%. I mean, it's bounced back a little bit, but 30%. Page Industries, a case in point today, happened with a bunch of those cooler companies and air conditioner companies as well in the last 6 or 9 odd months. And versus that, the inexpensive names are somehow not getting bought into in a big way. So what is expensive has started becoming cheap, but what was cheap is not coming back to mean reversion. Why is that?
Sure, two things. One, that we have to understand that we are probably in that kind of bull phase where two important things. One, that interest rates keep on rising. At the same time, earnings also starts recovering. In this type of environment, typically what happens is basically those guys who disappoint on earnings and are at a higher multiple tend to correct in terms of their PEs. At the same time, what we also do see generally is as earnings catches up, overall market PE also starts to taper a little bit. So you have to see or you have to approach the companies in this light where there is not much of room for those companies where valuation is already discounted, and if they fail to deliver on growth, they will surely take a big beating or knock on their PEs. Having said that, in terms of those companies which are cheap and are appearing like value, in that pocket, we also need to understand that if there is a catalyst going forward, or there is anything positive to look forward apart from the consistent earnings growth, then there is a chance of those kind of sectors to inch up. But having said that, a substantial PE re-rating on the higher side, I don't think that's happening.
Vaibhav, this is Agam. Good afternoon. Can you tell me about how you're reading cues from the macros that we've got so far? Inflation for October has come below expectations. We're also starting to see a severe drop in crude prices, which means that the Monetary Policy Committee will have much to think about when it comes to the next rate review. What are you factoring in, and how would you then play the interest rate sensitives? And I want to leave the financial sector aside. If you leave that aside, how would you play the other interest rate sensitives?
No, I think as you rightly pointed out, the macros have been getting better, right from Brent. At the same time, inflation numbers have been pretty much in control. We do expect that the interest rates are likely to be around these levels. I don't see any sharp uptick from the monetary policy side. Having said that, I think when we speak about interest rate sensitives, I think you need to understand that it is a factor of the ability to finance, which leads to the performance of the interest rate sensitives. I mean, interest rate sensitives can be across. consumer discretionary, probably to real estate, housing, and so on and so forth. So, an ability for NBFCs stroke financials to fund that kind of growth is very, very important. And what we have seen in last couple of months is because of whatever has happened to liquidity and the debt markets, we do feel that there is some pocket of NBFCs might not be able to by not be able to grow at the pace that they have been growing till now. So interest rate sensitives, I don't see any big problem, but if finance is available from alternate sources, then it should be perfectly fine, I think.
And Vaibhav, how are you making that distinction in choosing your NBFCs at this point in time?
We are very, very clear about it that those kind of NBFCs which are pretty good on ALM, or who have very diversified liability franchise, they are surely going to benefit at the cost of others. So you might see those NBFCs which are big, diverse, even getting stronger from here onwards as well. At the same time, what we also think is basically some amount of growth which may slip up by the NBFC would be captured by the banking sector, which now is looking pretty promising.
Interesting. Could there be a mean reversion of either valuations or growth in the auto space, Vaibhav? What's the house call there? Because if there is one space where valuations are in your favor in the large cap arena, it's probably autos. But I don't quite have a handle on what the market is now factoring in on what growth rates would look like.
No, of course, we do think that autos may perform on a consistent basis, but not to those kind of elevated levels where in the last couple of years you saw tailwinds of pay commission. We do think that the growth may taper a bit, but having said that, the elections are in April, May. Up till the run up of elections, you generally find that consumer discretionary, including autos, tend to perform well because money is pretty much high in terms of circulation. So spending increases in the last 6 to 12 months or going into the election. So we do estimate that the numbers might be pretty okay in the next months, but you have to realize that on a cyclical basis, we are passed through that pay commission tailwind. So you have to adjust your numbers in the models to some amount of tapering of growth. And as I said earlier as well, that if those companies try to disappoint in terms of the growth, then the PE gets knocked off. That is what we saw in the last couple of months, again, which was aggravated by the NBFCs as well. So from here onwards, we do think that they may be, market performers, neither outperformer nor underperformer. We pretty much would be neutral.
Okay. My final question, and just one more, is on a completely unrelated pocket, and that's exporters. Now, with the currency doing what it is doing, and today while it's strengthened a bit, I believe everybody believes the fair value is southwards of 70. In that scenario, for the next 1 year, would you believe the market will give more weightage to import substitutes, or would it give more weightage to exporters?
No, it does give some merit to actually both the pockets, and why I do say that is basically you have to understand in terms of the exporters, we've always seen that whenever the sizable currency depreciation happens, exports actually tend to recover a month or two, after a month or two, and you might go and see those kind of numbers flowing in from the next month. Also, on an overall basis, you need to see that INR actually has depreciated from 64 to 73, 74 and back to now 71, close to about 71, which is again a big tailwind. At the same time, export sectors like an IT or a pharma, on valuation perspective, are pretty fair. I don't think that they are overvalued even at these levels. So you might see some amount of pain or sentiment weakness because of the recovery in rupee which is happening. But on an overall basis, where the business is bottoming out and actually looking up, with a tailwind in currency which has happened from 64 to 70, we are constructive on that. In addition to that, your import substitutes also definitely make a great opportunity.
Speaking of the rupee, let's bring that out because the US dollar has moved below the mark of 72 at this point in time against the Indian rupee, and that of course bodes well for those who would be long on the rupee, perhaps not as much for those who are long on the IT industry. But well, Vaibhav, coming back to you, or perhaps a final question from my end, how would you play consumer staples at this time? What we've been seeing over the past couple of quarters, there's certainly been a recovery in volumes for a lot of these leaders in the large cap stocks, but it's been extremely volatile as you go down the order in market capitalization. The question then is, large cap stocks still and will possibly always trade at a certain premium as compared to the smaller ones. So how would you go about distinguishing where you would want to place your bets on when it comes to some of these consumer staple names?
That's a very interesting observation, and right, because what is happening in the consumer sector, especially on the staple side, we are seeing prime two companies, investing into their distribution networks, investing into data analytics, using sophisticated technology to actually target their markets and pricing. Because of which what we have seen is they have been capturing market share, increasing volume growth, and are being able to increase the prices as well, which is in stark contrast to what the other staple companies have declared in this quarter. We do believe that the fruits of investing into technology by consumer companies is going to continue or help them to continue perform on the volume growth piece. At the same time, on a macro opportunity basis, India is a consumer market, right? And of course, consumer-driven stocks would be beneficial for a pretty long period of time, and thus we are seeing pretty high valuations on them as well. But to just re-emphasize your point is that the larger companies would even become larger as they increase their distribution reach and launch innovative products.
Okay, Vaibhav, we'll leave it at that. Thank you so much for taking the time out and being with us, and all the best for the quarters ahead.
Thank you very much.
It's Vaibhav Sanghavi of Avendus. Okay, let's continue with more expert opinion and continue with our coverage of the CLSA's annual investor conference in New Delhi. Joining us now on the show is Vikash Jain, who tracks the oil and gas space very closely. And of course, joining in the conversation is Somit Sarkar from our research desk. Somit, over to you.
Thank you, Neeraj. So Vikash, to start off, how were the Q2 earnings for the entire oil and gas piece? What were the misses and hits in the second quarter?
In second quarter, broadly, if you were to see the OMCs, the earnings were, core earnings weren't really that great. Nearly 80 to 90% of the PBT were made up of inventory gains. Mind you, this will turn into inventory losses in the coming quarter. On the other side, refining margins, which were anyways weaker than what we had expected for the last quarter, could actually further weaken if you were to believe the Asian GRM trends. So, it will all boil down to, with the falling crude price, if there is going to be some significant recovery in marketing margins or not. The upstream names benefited from the fact that there was no subsidy burden. The commentary from some of the companies has been that there will be no subsidy burden even in the second half. If that continues, then they should be all right. But the belief on that for the market seems to be very low. And that's why some of these stocks are also, particularly the bigger upstream names, are trading at much lower valuations. City gas names saw reasonable volume growth, particularly the non-industrial ones, the retail ones. And gas transmission and regasification, there wasn't much to write home about in terms of volume growth, flattish kind of a volume growth on a QOQ basis.
Now, earlier we have seen that the oil marketing companies were under pressure because of that government's decision. But now with oil prices coming off sharply, would you change your stance on the oil marketing companies?
On oil prices itself, we've seen a big shift from in the last 15 days itself. A confirmation by the US administration that Iran sanctions would be much more watered down has meant that all the worry which was linked to the Iran sanctions have gone away. And nonetheless, but market is still looking at the production number of October by OPEC, which was pushed up in the anticipation of Iran sanctions. Commentary after that from OPEC has been largely ignored. OPEC, in my opinion, OPEC plus, that is Russia and OPEC, mainly Saudi Arabia, has an ability to put a floor on crude price, and typically they like prices around that 70 plus kind of a range is the feel that I get, listening to them. So I think, this crude, large part of the absolute price correction in crude price is over. It might stay here for some time, but clearly I believe that OPEC plus should be able to create a floor on this in the next meeting, which is not very far from now. So sometime within this calendar year itself, there should be a floor in place for crude prices. What I'm more worried about, is how do price changes happen when crude has come down? Does this lead to improvement in marketing margins or not, is something which we need to track. And secondly, what we also need to track is, if crude starts improving because of production cuts by OPEC in early part of next year, that's actually a bad time for crude to rise, given that we'll be busy with elections. So those are some of the things to watch out for. What does OPEC do to put a floor, and whether marketing margins actually improve as crude prices have fallen.
Also, currently, if you see the share prices of upstream companies, they are factoring in a very high subsidy burden. So what is your view on that front? And even, do you actually expect the upstream companies to share subsidy burden in financial year 2019?
See, it is over since the budget was given out in early part of this year, in the Jan end. There's been this concern on upstream companies because the subsidy number in the budget was a very low number, and the market has been nervous ever since. However, what we wrote about this just a few weeks back, that although the market is focused on the subsidy number being lower, what the market has completely ignored, that even the revenues from the sector, particularly the upstream side of things, has been under budgeted by the government. Our recent report actually highlighted that the hole on the subsidy side could be as much as 23,000 crores or so. But on the other side, the revenue, because of higher royalty, higher cess collections, higher profit petroleum, and even if a scenario comes where these companies are allowed to take all of the profit and not put a subsidy burden, then higher dividend distribution tax, and higher income tax could easily offset that 23,000 crore number. So there is no necessity for the government to kind of really bring in subsidy in this particular fiscal. The commentary from the companies has also been on that line. That from some of the government sources has also been on that line. However, you know, investors in general, including possibly myself, who's looked at these companies for a long time, carry a historical baggage. But what we need to keep in mind is that it was very strange that all the time when crude was going higher, you know, the bigger upstream stocks were going down, the PSU upstream stocks. This is because people were extremely nervous on subsidies. In fact, they were so nervous that we recently wrote that one of the bigger upstream names is actually trading near its bear case value. So I think the actual outcome, which possibly should be known anytime in the next 3 months, will be way better than what the stock is currently pricing in. In case it comes out that there is no subsidy burden itself, there could be pretty big upside on some of these upstream names. So I would say the risk reward is extremely attractive since the large part of the worst case is already in the price.
Lastly, what would drive the stock prices of upstream and downstream companies? Would it be the government policies or the crude prices?
Like I said, of course, we're talking of a crude scenario as in, you know, things not going below, say, 45 or so, 45 or 50 or so. In that scenario, I think the worst on crude prices is already in the price for the upstream names. So in my opinion, policy is going to be the key driver for upstream names. For downstream names, the way these stocks react, it's going to be a combination of the two. However, policy in the sense that how much of the price cut is actually passed on and how much is kept in the margins. But on a day-to-day basis, clearly those stocks move a lot in tandem with crude prices. So essentially, I don't see a change in the policy anytime from here in the election to the elections. That is the government coming and saying that we are allowing them an extra 1 rupee margin, given the political sensitivity around all of this. So it's really tracking the changes in pump prices and how crude moves. But in case of upstream, policy is going to be clearly the key driver. That is the clarity on subsidy burden, which should come anytime in the next 3 months.
Moving on to the gas space. Now, if you see the 9th round of city gas auction, that was muted for all the listed city gas distribution companies. So where do you see the growth coming in for these companies going forward?
Clearly, if you look at, it depends on which geography you're talking about. But you know, some of the ones up north actually still have some untapped areas which they have been allocated and they can really get onto to expand their volumes. At the same point of time, there is also a new geography that they've won because of a court order. So all of that should ensure volume growth in the medium term. Nonetheless, the key thing for city gas companies to watch out for in terms of volume growth as well as margins is how is the discount to competing fuels. The discount to petrol and diesel, for example, is between 40 and 60%. As long as that discount stays high, there will be more conversion that should allow you know, higher volumes and at the same point of time give them pricing power to maintain margins. So anything which happens to shrink that discount is what will make us worried. At this juncture, those things look unlikely. So the discount versus competing fuels is the key thing to track. That has to stay at a reasonably high level.
Now, if you see the oil marketing companies, they have also placed big bets on the city gas distribution space. So how do you see this helping them? Will it result into higher revenues or will it just replace their fuel revenues?
No, so essentially, that's a much longer term bet, clearly. At this juncture, we don't really expect the market to recognize that at this, you know, at the current juncture in the near term. What that will do is over the medium to longer term, in a way, if there is a shift away from liquids, you know, given the policy of the government to promote gas, then they can definitely use their own petrol stations to and ensure that those volumes do not go out of their ambit. That is, you know, even if people move from liquids to gas, then those customers stay with them. So I think, but that's clearly a more longer term game.
With the final pipeline tariff hike expected to come in December, who is better placed? Will it be the transmission companies or the city gas distribution companies?
See, it's really, gas transmission. So in a report that we did, a big detailed report about a year or so back, we wrote about the fact that demand for city gas would double in the next 5-6 years at a time when India's demand is going to rise by about 50% or 60% or so. So if you want to play volume growth, clearly city gas will have a much higher volume growth than gas transmission. However, gas transmission is a more secular way to play it. So, because the fact is a large part of the, if you were to look at the current auctions, there could be several, city gas players who are not listed. So if you want to play volume growth across the country, then that's a more secular way to play it. So I would say that it's, and you can also see that valuation of gas transmission players is also much cheaper. So it's really, if you were to bring valuation into the, into the whole investment framework, then I would say that perhaps gas transmission is better, but if you were to give volume growth is what you prefer, then city gas distribution would be better.
Well, that would be all, sir. Thank you for speaking to Bloomberg Quint. Back to you.
All right, Sumit, while you are with us, let's just address, perhaps go back to what's happening with Vodafone Idea as well. Sumit, if you could give us an update on the same, if you're still here with us, that is, and, perhaps give us a reason why we have seen that weakness in that stock today.
Well, the major reason behind this weakness was this 25,000 crore fund infusion plan that the company has announced. Now, a 25,000 crore fund infusion plan for a company which has a market capitalization of only 36,000 crore rupees, that's a huge amount. It would lead to more than close to 41% equity dilution, and that's the reason why we have seen this kind of a fall in Vodafone Idea's share prices. Now, if you see the company's leverage ratio, now before this fund infusion, the net debt to EBITDA of the company is close to 24 times, and post this fund infusion, also the leverage ratio would be close to 16.8, close to 18.6 times. So it's still at an elevated level when compared to its peers like Bharti Airtel and Reliance Jio. So that's the second reason why we are seeing such kind of fall in the share prices of Vodafone Idea. Lastly, if you see the earnings, the second quarter numbers that Vodafone Idea had reported, they were weak on all fronts. So we do not have the comparable numbers, but if you see the revenue of the company, that was close to 7,700 crore rupees. The company reported a net loss of close to 5,000 crore rupees. EBITDA came in at around 461 crore, while the margin was close to 6%. Also, the average revenue per user of the company was the lowest in the industry at close to 88 rupees per user. So because of these three reasons, we are seeing this kind of fall in the share prices of Vodafone Idea today.
Okay, fair enough, Sumit. Thanks for joining us and taking us through that conversation on the oil and gas sector, as well as giving us updates on Vodafone Idea. But we'll move on and we'll get in our experts for the day. First up, we have Abhijit Phatak of Definedge Solutions, who's joining us. Abhijit, good afternoon. Thank you so much for joining us. The Nifty currently is at around 10,600, slightly above that. And we're also seeing the Nifty banking index inch higher. How are you seeing trade on both these indices now?
Yes, both are bullish, and in fact Bank Nifty is more bullish than the Nifty because it has already closed above the 200-day moving average yesterday as well as today. And I expect Nifty to also follow the same way. And Nifty, as long as the stop loss is a bit far away below 10,500, but Nifty is still bullish, and I expect it to cross 10,700 in the coming days.
Interesting. Okay, so the question, Abhijit, would be that would you be comfortable buying the futures at the current levels, or would you hedge it with some options along with?
Yeah, buying Nifty futures and selling a 10,700 call, which is around 90, 95, maybe if you can get it near 100 or even here. That can be a good hedge, because if it goes below 10,500, this call will pay for the loss in the futures.
You're not completely convinced of this call. It looks bullish, but because of the rally, you are hedging your bets. Is that the reason?
Two things. One is there's been a big rally of almost 650 points, number one. And number two, this 200-day moving average, it might not do anything. It might just consolidate for the next few days, in which case the 10,700 call will fall because of the time value.
Okay, then Abhijit, why don't you take us through the stocks that you're betting on today's day of trade as well?
Yeah, two stocks which I have are both bullish. One is Dabur, which is showing quite good signs of reversal. If one can buy it near 383, 384, it has the potential to go or even cross 400 in the coming days. Stop loss will be around 375. And another stock which is a bit contrarian bet, it has been in a downtrend, but I expect it to turn around soon. ITC has been coming down all the way from 285, it is now 273, 274. So with the stop loss below 272, I expect ITC to go back to 280 or 285 in the coming days.
Okay, we also have Hadrien Mendonca joining us from IIFL this afternoon. Hadrien, good afternoon. How are you seeing trade on the indices right now? Are you also bullish, or would you remain cautious with respect to trade on the upside?
Yeah, hi, good afternoon. And I would, absolutely remain bullish. Things are getting better and better as the days are passing by. We are seeing the index, especially the Bank Nifty, gaining more momentum if you compare it with the Nifty. So, in my opinion, if there is going to be a good up move from here on, it is going to be led by the banks. If you see the constituents of the Bank Nifty, ICICI Bank has broken out from a multi-year, consolidation pattern. If you see, the State Bank of India is, also contributing from its end. On the other hand, HDFC Bank is also making a good comeback. So I think if the heavyweights are going to participate in the rally, Bank Nifty is definitely going to lead the next leg of up move for the markets. And I think one can consider going long in Bank Nifty even at these levels. We've seen a classic cup and handle pattern breakout on the smaller time frame charts, which is a very good positive development. Secondly, the Bank Nifty has also surpassed its long-term 200-day moving average, which the Nifty has still not managed to do so. So that's the reason I'm, more bullish on the Bank Nifty, and one can consider going long on the Bank Nifty with a near-term target of 26,800 on the upside in the next coming week or so.
Okay, Hadrien, and I believe you're banking on a auto name and another financial name. Can you also take us through those calls?
Yeah, absolutely, and both are bullish calls. So first is Maruti, an index heavyweight, trying to make a very strong comeback. In fact, we are seeing a very beautiful inverse head and shoulder pattern breakout after a long, haul of downfall for a Maruti. So I think one shouldn't miss an opportunity to going long on Maruti. Although we have got a 300-point up move, post the breakout, but I think there is still a lot of leg remaining on the upside. One can consider going long on Maruti for a target of 79.50, keeping a stop loss at 7310. Whereas the other stock is M&M Financials. In fact, it's just broken out its 200-day moving average with good volume participation. I think one can also consider going long on an M&M Financials for a target of 465, keeping a stop loss at 442.
Okay, just perhaps one or two stocks that I want to address before we move on. Let's bring up Page Industries, because that's one of the stocks that I did highlight, and where I suggested that there was some shorts building into the system considering an increase in open interest. It's now down 7% and it's near the day's low. And well, it has broken the 26,000 level as well on the downside. Hadrien, can I come back to you on this one? How are you viewing trade on Page Industries now?
Yeah, definitely one should not go long on a Page Industries. We are seeing, a small structural breakdown on the daily as well as the weekly charts. If you do a Fibonacci retracement, it is actually heading towards its 61.8% retracement levels. That is close to a 25,000 mark. So I think this downfall still has some legs, which can decline, which can drag Page Industries much lower from here on. So definitely, avoid going long on a Page Industries, because the momentum on the downside is pretty much strong. So definitely one should avoid going long on Page Industries.
Okay, well, avoid going long on Page Industries. It's difficult one to short after the correction that has happened as well. And we'll get in Sharmila Joshi's view on Page and some of the others too. But just before we do that, Sharad Dubey from our research team is here to talk about some other buzzing stocks as well. Stocks which have made a move and the reasons thereof. Sharad, good afternoon.
Good afternoon, Neeraj. Jet Airways is up by almost 16%, giving a single highest day gain since July 2015. So now if you look, the ET reports had come in which Tata was considering an all-stock merger with Vistara and the jet operated Tata Sia Airlines. According to this, the next step of deal will be to acquire the Naresh Goyal's family stake. Apart from this, talks accelerated after TPG Capital declined to talk regarding the stake sale. Apart from this, the second stock we are having is Coffee Day Enterprises, which has fallen by almost 6% after giving a very bad and a muted quarterly results, which profits falling by almost 50% to 22 odd crore rupees. Apart from this, the business, the board has given an approval for the restructuring of their coffee businesses and desegmenting it into non-coffee businesses. So basically, the actual decision has not come over, but the company is having retail, SEZ, logistics, real estate, and financial services company. Apart from this, the third company which we are tracking is IOCL Chemicals, which is almost up by 9% after the revenues doubled up to around 423 odd crore rupees. The board also approved enhancing of metformin unit for around 2.7 crore rupees, which will expand the capacities from 3,000 tons per annum to 4,000 tons per annum. Apart from this, there will be a completion of clopidogrel bisulfate and fenofibrate for around rupees 19.263 crores, which will have a capacity of 180 tons per annum. And both of this capex will be funded by internal accruals. Back to you.
Oh, thanks a lot for that, Sharad. So interesting names out there. Good questions and good time to get in. Sharmila Joshi, independent investment advisor, joins us right now on the show. And as intrigued I am to figure out why is it that Sharmila wants to buy Yes Bank, I'll start off with the newsmakers first. And Sharmila, let's get on to the newsmakers and start off with Jet Airways. Now, it requires you to be a brave heart to go out and buy Jet Airways on this piece of news, especially after the stock is available at 295 and not at 195. However, let me ask you, what would you do here?
Well, as you said it right. I think that perhaps at the start of the day it might have made sense because you had a scenario where crude was had come off from their higher levels and is now at 65, and you have this piece of news that they could be finding a buyer, because let's not forget that it is the kind of debt issues that Jet Airways is facing, and they're strapped for cash, which is why market has also not been liking this stock, and you've seen correction, in fact, across the aviation space, because the numbers have not again been anything to write home about. So that said, I think we've seen a good sort of a trading pop, and maybe this could continue maybe for a little bit more, but I don't really see much more steam now left in Jet Airways, given the fact that it's done so much in a day. So I would now really wait for more, more clarity on this move, whether this really, this is really the direction in which the stock is going, because that obviously would put a different spin on things. But I think that speculative buying bit, I think it's sort of run its team.
Right. Sharmila, good afternoon. We have a lot of questions on Yes Bank day in, day out throughout our shows, and well, you do have a view on Yes Bank, so why don't you take us through this, especially given today we're seeing some amount of weakness. So is this an opportunity that you'd like to take when it comes to Yes Bank?
Well, yes, I think overall my view over this last month or so has been really to look at more frontline stocks than mid caps. And then I think, we've had a stock here which has really taken a beating. First, you had that whole Rana Kapoor issue play out, and market reacted to that. And now you had this unfortunate incident, and all of us know that the one thing that market doesn't like is uncertainty. But that said, I think if you were to just go by numbers, then I think this bank is now available at a very decent price. And I don't think this is a situation that's going to last forever. There's this vacuum that we have at this point in time, and I think this is going to get addressed sooner rather than later. So I think anything that you buy now has to be with that slightly longer term perspective, and I'm not looking at it as a trading pop, but I definitely think that maybe 3-4 months down the line, this will in retrospect seem like a good price to have entered into the stock. So it is giving you that opportunity, it is giving you that entry point. So I think longer term investors should make use of it.
Okay, and Sharmila, the other one was M&M. Is that the best bet that you're seeing in the auto space right now?
Well, I don't know about best bet, but it's what I like best. And I think that, their entire portfolio, the way it is at this point in time, whether it's commercial vehicles, whether it's SUV, whether it's the farm equipment piece, they are the leaders in that. And, next year is supposed to be better for them. Again, among the large cap stocks, this is a stock that is corrected almost from 1,000 levels to currently, 750 odd. So I think, you've seen that sort of 30% correction in this stock, and the numbers were fairly decent. I think they were expected to be worse. They were a little better than what I expected. You have some new launches from them. I think there's the whole Java two-wheeler bit, as well as, some new launches on the SUV front, etc., which should hopefully mean better numbers. That Marazzo has a waiting period of 6 to 8 weeks. So, that will all reflect in the coming quarters. So all said and done, again, I think that this is now giving you a fairly decent entry point. Yes, I think, you could argue that Maruti also is at a fairly decent level. But very honestly, for a long time, I've preferred Mahindra and Mahindra, especially after that whole Maruti Gujarat unit has come about. My preferred play within this space has been Mahindra and Mahindra.
Okay, well, I want to quickly get a technical check on Motherson Sumi, because that's another stock which is now trading at day's lows. Do remember it saw a considerable cut yesterday, and that well, that weakness is continuing today's day of trade as well. It's now at 147. Abhijit, can I get you in on Motherson Sumi? How are you viewing trade on this one? It's seen substantial weakness, but how is the risk reward now if should one were to look at more shorts into this stock?
No, actually the risk reward also is not very good. Of course, it is still weak, but then going short at these levels will, the risk reward is almost, the stop loss is almost 20 rupees higher. So maybe wait for a retracement, and then with a stop loss above 166, 168, one can go short, but not here.
Interesting. Okay. So don't go short at these levels, but the stock has been grinding lower for a while now. Frankly, if you want to look for movers, you don't have to look out of the index as well, because there are a clutch of these names which are doing rather well for themselves. Just a quick perspective out here, Aga, I'm sure you would have some thoughts here too, but I just want to get a chart check going first on Titan before we get to the fundamentals. Hidden Mendonca, for somebody who had a long position on Titan, and I'm glad that you had spoken about this a couple of days back when we had the interaction, but for somebody who had that long position, should he take money off the table now, or could there be more upside here?
No, absolutely not. Do not take money off the table as far as Titan is concerned. In fact, on the daily charts, we are seeing a declining channel pattern breakout, which is a very good, positive development for Titan. Secondly, it is also sustained above its long-term 200-day moving average, which means from here on there is much more upside. Post the breakout, I won't be surprised to see Titan heading towards the 1,000 rupees mark in the coming month or so. So definitely do not take the money off the table. In fact, one can actually accumulate even at these levels, and any kind of decline should be a good opportunity once again to enter on Titan.
And fundamentally, one may argue that the second quarter has not been that great, at least as far as profitability is concerned for Titan. But that's not what this consensus is telling you, because if you actually pull out the analyst ratings of Titan company at this point in time, you have about 25 analysts out of, well, I would say 32 odd who have a buy rating on Titan. That's one. Secondly, your return potential, even after this up move that we've seen after its earnings, it still indicates a 10% up move from current market levels. So as Hadrien was suggesting, even on a fundamental basis, well, the 1,000 rupees per share is very much on the cards according to the analysts on the Bloomberg consensus. And if you also notice, if we can bring that ANR chart back, after the company came out with its earnings, there's been not a single person on that particular chart who has downgraded the stock. They've all maintained their ratings, and well, they've all maintained their price targets as well. In fact, one particular brokerage, this Decoding Capital, that has upgraded the stock. So, well, on the whole, things are turning out favorable here. But Sharmila, I'm going to take this question to you as well. Would you concur to what the street has to say about Titan, or would you be wary of going into something like this?
Yes, absolutely. I think that definitely this is a stock that I like, and I think moreover, adding to everything that you said in terms of where earnings are, etc. I think there are two very compelling reasons why I think you should look at Titan. One is that the whole consumption story. I don't think that there is any sort of reason to believe that we are at the end of that. And especially as we get into this quarter, and it's a whole new sort of a wedding season, and you had this delayed festive season, so you will see a lot of that buying that happens during festive season as well as the wedding season getting reflected in the next quarter. And I think within the space, within the jewelry space, you really have there are very few options left, and I think because of everything that's happened within that sector, and we've seen what has happened with some of these stocks. So I think within that, the preferred play now has emerged as Titan. And given now the overall scenario where you have even if you were to look at the unorganized market, I think there is now a trend that moves more towards, in this post-GST and KYC and all those norms. I think there is now a push towards the organized play, and within that, I think Titan is definitely the preferred play. So without doubt, I think that this is a stock that I continue to like.
Yeah, the next one is Ujjivan Financial Services. Now, very strong numbers. I know the overhang is of that shareholding norms and what the RBI or the SEBI has directed them to do. But here's a scenario that somebody painted, that if they transfer 60% of that overall 100% to the existing shareholders, and then you assign a 50% discount to the remaining 40%, 80% of the value is still intact, and the valuation destruction has been a lot more. And if indeed the cost to income ratio shows the downtrend that it has just started to show, and the numbers look the way they are, then maybe the small finance banks could be a force to reckon with. It's certainly showing in the way the Ujjivan stock has performed the last couple of days. The question mark only is it a good purchase at these levels versus what it was, or does it still offer some value? Sharmila, Ujjivan or an Equitas or an AU small finance bank, do you like these SFBs?
I do, and I think that we've seen better numbers from all of them. The concern is exactly what you pointed out. It is this whole directive, to do with bringing down their shareholding and listing the bank, etc. Especially for Equitas, I think that they've been hit really hard because for them the time frame is really short. I think even if you looked at the Ujjivan numbers, definitely a sense of comfort, and they've also management has sort of reiterated that the microfinance space is where they would continue to grow their AUMs, etc. But I think that's the overhang, how they really sort this issue out. So probably now within that space, maybe I would think that AU would probably be a little better. But I would agree with you broadly. I think there is no need to be really brave right now until we get clarity on how they really intend to bring about their listing. Because, if you look at it from a price perspective, maybe Equitas is best. But we don't know how they're going to do, how they're going to sort this thing out in such a short time frame. So let's just wait and watch this space. But definitely in terms of numbers, I like all three.
Okay, Sharmila, we'll take a moment to thank you for joining us and taking us through your views on the markets and the various stocks that we spoke about. And with that, we will slip into a quick break, but let's also listen into the comments from Christopher Woods of CLSA on global equities, Indian markets, liquidity, as well as interest rates. Here's more.
Right, well, in the case of China, personally, I think China's equities are extremely cheap. I think a lot of the weakness in China equities is self-induced by government deleveraging. The Trump administration thinks the weakness in the Chinese stock market is driven by the trade dispute, but it's not. It's driven by the squeeze on shadow banking. I think there's been a lot of forced selling in China equities this year for various technical factors. And I believe basically Chinese equities are very attractive at this point. The risk in China the next few quarters is weakening in the property market, but the Chinese have a lot of policies they could implement if they wanted to stimulate. So personally, China's a market I would be buying today if I'm an emerging Asian portfolio manager. India, I think, is going to provide a buying opportunity, but I wouldn't be rushing to buy India like right now today. I think the buying opportunity is going to come more likely after the state elections first quarter. If the BJP does not do well in these current state elections you're having, then, which is a distinct possibility because people often vote anti-incumbent, then you will get a lot of noise that Mr. Modi won't be re-elected, and that the domestic investors here will get more nervous. I think that will create a good buying opportunity for foreigners. Because in my view, the Modi government will be re-elected with a diminished majority, but I believe there's a lot of room for people to worry that it won't.
So is that the only reason that's keeping foreign investors away, waiting to know the result of the elections?
No, I'm not sure. I don't think the foreigners are obsessed on the politics as the locals. Yeah. But I think what's unnerved the foreigners is what's just happened happened a month or two ago in the credit space, where you've had a AAA rated bond default, which clearly has caused a big concern, and clearly in the whole housing non-bank financial space you're going to have a significant slowdown. But based on my very superficial observation from initial meetings this week, I'm hoping, with the emphasis on the word hope, that the worst has been seen in this area. But going forward, there's going to be a material slowdown.
Right. But would you paint all the NBFCs with the same brush? I mean, there are...
No, but the bottom line is if you have a AAA rated bond default, then it's going to make the market
effect,
nervous. So what it's going to mean in reality is that bond investors are going to invest first and foremost on the names of the parentage, because they're no longer going to believe the credit ratings.
True.
So that's a big problem.
Yeah.
Because not everybody is a subsidiary of a long-established parent.
You have a significant chunk in your model portfolio for NBFCs and the financial space as a whole. Are you tweaking around?
If I was running, so this portfolio, see this portfolio is a good example because this portfolio was outperforming the Asian benchmark quite significantly until the events happened, which I believe was late August. Yes, and so this portfolio got smashed in the month of September because I've always had actually, since I began this portfolio, which is a long time ago, 2002, probably the biggest weighting for the whole period has been Indian financials.
Yeah.
So I know I'm not panicking out, but the point is it's a big hit.
It'll be a slow and gradual recovery.
Yes, because without any doubt whatsoever, the rate of growth is going to slow in this area. Long term, I think this represents a huge opportunity, particularly in the property space, because in my view, the residential property sector in India was already facing what I call a double whammy. The double whammy was first demonetization. Yeah. The second was the introduction of the Real Estate Regulation Act, RERA, which I think is a very good piece of legislation, but clearly it's going to cause consolidation. So we're already looking at a brutal consolidation. We're now getting a triple whammy because clearly liquidity because these housing finance companies are finance developers.
Yeah.
So there's a triple whammy. So what people need to be doing is working out who are the well-capitalized property developers who are going to benefit from what's going to be absolutely brutal consolidation.
But that means that they now need to focus more on getting rid of their inventory and start selling a little bit more instead of just, holding on for liquidity in terms of bank credit or any other form.
Sure, but this consolidation was already happening.
Yeah.
It's just going to become more dramatic. But in my view, you want to own the quality property companies who are going to benefit from the consolidation. Meanwhile, amidst the bearish sentiment, we need to remember that the affordable housing build-out is still going on. The affordable housing program is underway, and that's very positive. And you want to own stocks benefiting this area. The other good news for India short-term is oil coming down.
Yeah.
Actually, though, on a one-year view, my biggest concern on India is oil, because I still think there's a lot of potential for oil to go up. So I think the oil correction you're seeing of late is simply driven by the news flow in Iran.
Yeah, and OPEC saying that the demand for their own crude is coming off on the backdrop of the economic slowdown.
Yes, I'm not quite sure where OPEC's getting that from. Yeah. But to me, the key variable is we've gone in a space of 2 months from the world assuming that the Americans are going to put sanctions on anybody bought any Iran oil whatsoever, to the Americans doing almost 100% U-turn and making these significant exemptions. So I personally think that's the key reason for the round trip in oil.
So in your view, the long term, you do see crude oil going higher?
I think there's a material risk of oil goes significantly higher, so the Indian government should be aware of that risk, and that certainly be very, very dangerous to assume that oil has peaked here, because the fact is there's very little evidence so far statistically of demand for oil slowing. I know these are just forecasts.
Yeah.
And the reason demand for oil keeps exceeding the IEA forecasts is because of demand in emerging markets. Actually, India is actually about to get to a level of GDP per capita China was back in 2001 when oil demand exploded on the upside in China.
So the excitement around crude oil coming off and the positive implications for CAD may be short-lived, is that what you're saying?
Yeah, I'm saying the key thing is a big relief that this Iranian sanctions were not enforced. Otherwise, I think oil could be way higher.
When we're talking about liquidity, it is a term which makes headlines, on an almost a daily basis for our markets as well. The RBI has been doing its fair bit to make sure the systemic liquidity stays. Are you happy with the proactiveness of the RBI?
Well, I'm not here, so apparently some measures have been taken. I'm not sure the government. I'm not sure the government is completely happy with the RBI. But I would say, in terms of this current noise, media noise about the dispute between the RBI and the government, personally, I'm more sympathetic to the government than some commentators, because the reality is the central bank has been running a pretty tight monetary policy in India in recent years. Because my understanding is the central bank has an inflation targeting policy, and they're targeting headline inflation. So if that's the policy, they're running very high real interest rates relative to headline inflation. So that, I think, is why they are vulnerable to criticism, because it looks like headline inflation has come down significantly in India, partly because of cheaper food prices, which I am told, I'm not an expert, reflects in productivity improvements in Indian agriculture.
Sure, but which is why they held interest rates the last time around, and they're probably most likely to do so this time around as well.
Yeah, but you could argue the rates could be materially lower in India. Now, if they're running monetary policy around concerns on the currency, then that would justify potentially having higher rates. But all I'm saying is there's a legitimate argument that monetary policy is being too tight, most particularly given that credit growth is weak and you have this legacy problem in the banking sector. So personally, I think monetary policy has been too tight. I think this argument of, the central bank being overcapitalized has some legitimacy. And I think anytime you can buy the Indian 10-year government bond at 8% yield, which you couldn't until a few weeks ago, is good value. So I think at 8%, foreigners will come back and buy Indian bonds.
Good news, guys. Got a promotion and a damn good raise.
Congrats, beta.
Congrats, मेरी तरफ से भी.
From mama too.
वाह, raise? अब तो इंश्योरेंस पॉलिसी ले ले.
इंश्योरेंस? कौन सी कंपनी से लूं?
सोचना क्या? चूज वही जिस पर हो पूरा भरोसा.
वीरू, go for convenience. My company is online, quick and simple.
बेटा, but पॉलिसी समझाएगा कौन?
वेबसाइट पे सब है पापा. I can even call and ask.
क्लेम सेटलमेंट का रेशियो क्या है? मेरी कंपनी का 98% से ज्यादा है.
That's good, but आज की generation wants everything online. Easy premium payment options, loan facilities, और wide range of products.
अरे पापा दीदी, I will decide. Just send your links now. तुम दोनों भी ना. Same choice. LIC.
LIC trending with times. 62 सालों से हर generation की पसंद.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Well, so far so good for the markets, about 0.5% for the Sensex and nearly 1% for the Nifty Bank. Just bring up the world markets for a moment and let's see what European markets are up to. The pound came off a little bit on that announcement, but that notwithstanding, let's see what FTSE CAC DAX are up to. Well, marginally in the green. The Dow futures should come up on your screen as well. After 6 days of a fall on the S&P 500, would we have some bit of respite for the Dow and the S&P? Looks like. So maybe we'll snap 6 days of gains. Actually, the US markets might snap 6 days of gains, 6 days of losses. Let's see if indeed that happens or not. Lastly, Just a quick mention of the turnover in the session today and see what's happened, because yesterday was the first day when we saw some meaningful uptick coming in the volumes. In today's session too, Thursday, so you would expect the F&O volumes to be up, but let's see if we indeed notch the 30,000 crores mark on the cash side, NSE cash, in the next 25 minutes of trade. Well, before we move any further and find that out, let's try and find out what's made it to Nikki Mirchandani's list of the Fab 4 stocks for the day today. Nikki, good afternoon. What's made it to your list?
I'm going to start off first with Apollo Hospital, where there has been a demerger proposal along with the results. The company is planning to hive off the front-end pharma business for a consideration of more than 500 crore. And if you look at the results, they've been heartening enough for the company. A decent show, I must say. The second one that in our list is Dilip Buildcon. After the muted set of earnings, which had been posted by the company, the stock has extended rally for the third straight session. But then do bear in mind the fact that the margin performance of the company was pretty much in line with what the guidance was. Third in the list, we have eClerk Services, which is up on the volume-based activity. Volumes remain strong for this counter, and if you look at this, it's more than 11% uptick there. The gains have been the highest since December 2017. And fourth in our list is Dhanuka Agritech, where the company has approved a buyback of 13.12% stake for rupees 550 per share, which according to the previous closing market price is at a 30% premium. Back to you guys.
Nikki, thanks for joining us and getting us those Fab 4 stocks of the day. But let's address a few other buzzing stocks as well. And actually, you know, one of the stocks which was also on Nikki's list was eClerx, which has seen a surge in well, its stock price today. It's essentially coming in the last couple of hours of trade. And I was wondering if we could take a technical check on this one. So I'm going to take this one up with Hadrien. Hadrien, if you're tracking eClerx right now, there was a sharp surge. How are you reading cues on this one based on the price action and the volumes?
Yeah, the price action has been significant, you know, along with the volumes. But, you know, if you leave out today's trade, it generally is very difficult to trade something like an eClerx because of the liquidity issue. You know, the volumes on a daily basis is on a very you know, lower side, so getting a trade on an eClerx is very difficult. However, after today's move, we have definitely seen a consolidation breakout. Base building that was going on for the past 3 to 4 weeks has finally broken. The only hurdle around here is the 1210 mark, that is the long-term 200-day moving average. Once we see that being taken out convincingly, I think eClerx can move higher towards the 1250, 1270 mark going forward. But the only caveat here is that you know, the stock is a little low on volume, so difficult to get a trade out here.
Okay, and the other one that I want to address is Emami, because this one has also made a sharp up move, and this is after we saw the stock, you know, see some considerable weakness. In fact, moving well away from well, its simple moving averages of 50, 100 or 200-day moving averages, but now it's making the dash towards at least the 50-day simple moving average. But let's take a tech check with this one. Abhijit, how are you viewing trade on Emami now? Is this a good time to go long on this one?
Sorry, I don't track the stock. Maybe I'll just have a look at the chart.
Sure, no worries. In the meantime, if we can actually pull up Emami and see you know, how it's done over the past 1 week or so, and take a look at how this one has been performing as well, because well, it's been a little bit of a rise in the last, I would say, 8-9 days from the levels of 400, now at 470, and you know, it's come back above and it's making quite a bit of a return, should I say. And it was also one of the laggers in the entire FMCG space. Of course, that's on a fundamental basis. But if we can come back to Abhijit on Emami, Abhijit, your view here, how would you trade this one?
Yeah, there is a resistance near 500, 510, so I expect it to go towards that, and it might consolidate there, but only on a weekly close above 500, 510, it can go higher, but that resistance might act for some days.
Okay. Well, look at the index gainers. Eicher Motors is now at 24,000, nearly there. Kotak Bank has recouped almost all of the losses of yesterday, and Adani Ports is up about 4.5. Actually, bring up the 1 month chart of Adani Ports if we can. I think it has moved up from about 300, 305 to about 346. That's been a bit of a pullback that we've seen in Adani Ports. So it will show 7% because it had declined. But if you just look at November, or slightly a couple of days before November, it's actually moved up from those 300 levels all the way to 346. Today, Adani Transmission is up about 10% too. So 2 or 3 of these Adani Group stocks certainly seem to be doing well. Mayuresh Joshi of Angel Broking with us right now on the show. Mayuresh, good having you. Thanks much for joining in. Interesting moves here on some index names which are moving up randomly without any news flow surrounding them. I mean, Adani Ports, for example, is the top index gainer today, 4.5%. What do you make here? We don't usually talk about this stock too often nowadays.
So we don't, but again, a large element in terms of how earnings have panned out and the expectations both in terms of the container volume growth along with expectations in terms of how the coal movement will be. I think that is something which is creating some amount of an impact in terms of how the volumes will shape up. The second element obviously is how the overall SEZ activities are going to get panned out, both in terms of the parcel sales and what probably happens in terms of utilization of its newer port acquisitions. So I think few of the older ports is somewhere where the focus of the company is probably on a much lesser scale and extent. But I think the newer ports is somewhere where the efficiencies might actually ramp up, both in terms of realizations as well as expectations of volume pickup happening. So I think nothing specific that we're probably hearing in terms of upgrades or what numbers were. So I think it is one of those moves along with the markets that Adani Ports is exhibiting.
Okay, Mayuresh, if you can also come in on Page Industries and perhaps address what's going on there, because this is the second straight day where we are seeing sharp cuts on Page Industries. On the other hand, the correction on something like perhaps a Rupa and Company or Lux Industries has not been so pronounced, but there's also a possible reason that the valuations are not as steep as Page Industries. So if we were to consider these 3 stocks, how would you place your bets here? What would your view be here?
Welcome afternoon. A large element of the correction also has been in terms of how the men's innerwear volumes had panned out, and they do account for almost 47-48% in terms of the revenue contribution. Leisurewear follows next at 27% and there the realizations per unit are far larger than what you've probably seen in the menswear section. The second element in terms of the spectrum on how these stocks trade, obviously Page was expensively valued at the valuations that it was trading at before this correction has happened post results. But again, I think if you're probably talking about in terms of how their business plans are panned out, they're expecting the EBOs to probably extend up to 1,000 over the next few years. You're probably looking at the outsourcing component move up from 30-odd% to 50-odd% over the next few years. So in that sense, again, I think there is a significant scope in terms of both earnings visibility and what they can probably do in terms of the costs that they probably incur. And on the one hand, I think if you're probably talking about input costs, specifically cotton prices moving higher, I think you're probably talking about some hikes being expected to be taken by the company itself. But again, I think it was a large element of 2 factors. A, valuations had been on the higher side. Obviously, it was trading at premium valuations. So I think these results probably have given some scope of correction for the bears. But again, I think over the long-term perspective, I think these factors should help out. On the other 2 stocks, again, I think they are interestingly poised as well, specifically in terms of the premiumization angle that they're probably posting. So specifically in terms of how Rupa is positioning itself, for example, or even a Lux Industries, I think the premiumization will itself ensure and entail that the margin improvement probably starts happening over a period of time. And they've got a lot of SKUs, so different price points and different products which suits different types of markets. So yes, I think it's a very interesting space, but because Page was obviously having the leadership position, I think some disappointment has resulted in the corrections happening onto the stock. But any further correction possibly becomes a very good buying opportunity in my opinion.
Mayuresh, would you be on the lookout for a tactical position or a tactical play in the tire companies? Rubber prices last couple of months have come off, crude has come off, the rupee is no longer at 75. Does all of this fit in well for a tactical play on tire companies?
So again, I think the two variables in Neeraj that you're discussing obviously play a huge effect in terms of both the operating performance and the overall earnings visibility. Now, what you've probably seen in the quarter gone by in terms of crude rises, it obviously happens with a lag effect in terms of crude oil derivatives catching up. So I think Q3 is where, again, I think a lot of heat will be faced by tire companies, specifically in terms of derivative or crude derivative prices actually moving higher. And again, I think if crude stabilizes at the current level and there is no excessive or exaggerated move in the rupee against the dollar, you might expect far more stability happening in the earnings visibility for these stocks. On the other hand, you probably got lesser pricing power as far as the OEM space is concerned, is what the markets already are aware of. But what probably happens in terms of the replacement market and where we've actually seen anti-dumping being imposed on certain sections of the MHCV market, I think the replacement market is something that should hold up. On the other hand, again, I think the capex plans that a few companies have announced, and again, what probably happens in terms of completion of these plans and utilization levels probably coming back to normalization levels, I think some hit in terms of absorption of fixed cost and depreciation would also play on their balance sheets. So I think Q3 will still be a little bit tough because of the lag effect on crude derivatives. But I think I'll be very, very selective within the tire pack. I'll probably be looking at companies where I think the MHCV exposure is probably there and where I think the capex is largely behind them and where the earnings synergies can actually play out.
Okay, hold that thought, Mayuresh. It's time to take a look at what the dealing rooms are recommending at this point in time. And as usual, we have Yatin Mota, who's joining us to give us an idea on the same. Yatin, good afternoon.
Good afternoon. And, Neeraj and Agam, we have a lot of the large caps in flavor. Given the fact that the banking end of the market and big boy Reliance Industries has made a good move from the recent lows, and in fact Reliance is also bouncing back. But starting with ICICI Bank, that is one stock which is at record highs, and dealers do expect the uptrend in ICICI Bank to continue, and probably that is the reason why they are recommending a buy on ICICI Bank as on a positional basis. I was also mentioning about Reliance Industries, and that is also one stock wherein dealers are recommending a buy today, sell tomorrow kind of a strategy. And if you look at the intraday chart of Reliance Industries, you will see how really is the buying happening in the last half an hour, 45 minutes of trade. So Reliance is again on the buy radar for dealing rooms. And this is how in the last half an hour we have seen the share price move up for Reliance Industries on decent volumes. And finally, we have Siemens. That is one stock which was down yesterday in trade to do with the fact that it was excluded from the MSCI Global Index. But today, almost a 5.5% move comes in on the back of domestic fund buying, which is happening in the stock, according to the dealing rooms. And dealing rooms do expect some bit of short covering also to happen in Siemens, so they are positive on this stock as well.
Interesting. After some time, we're seeing this, and Yatin, thanks for putting that into perspective. A bunch of people have spoken in the Diwali conversations about how there might be merit in looking at the cap goods space. Thermax, the numbers were in line with estimates, but margins did come off. However, the stock reacted marginally positively at the start, down about 0.5%. But Siemens is doing rather well for itself, up about 5% in trade. Mayuresh, is there a good capital good investment, and really let's not talk an L&T, somehow that's just too large, but the non-L&T side, is there a good cap goods investment?
So Neeraj, I think post results, I think most of these cap good players did come out with a very encouraging performance. Having said that, I think ABB probably looks very, very interesting because I think all the business facets that ABB is operating out of, the power grid automation that it probably does, huge opportunities in terms of renewables, and again solar inverters, you're probably talking about the grid transformation actually aiding the overall top line growth. When you're talking about the electrification part of their business, huge scope here as well. I think with a lot of tendering happening specifically in terms of Indian Railways, you're probably having a huge scope in terms of a lot of orders probably coming through. And electrification, interestingly, catches out in terms of better operating margins at 11.5%. Robotics and motions, again, I think 20% in terms of top line contribution. But I think a steady performance is expected on that front. So a large element in terms of how this overall performance will be, including the industrials, I think ABB probably looks positioned very, very well. And again, I think the return ratios are a testimony to what ABB has delivered. So I think in 23% kind of an ROCE in FY18. If all these factors probably come at play for ABB, I think you can easily expect a 200-300 bips improvement in ROCEs. And with cash flows improving, my own sense is that it's a very, very strong balance sheet that the company possesses. So if I have to pick and choose, probably ABB is something which can probably have a say in terms of earnings upgrades over the next few quarters. As their execution improves and as their order book picks up steam, I think there will be far more synergies even in the return ratios that this company can throw out.
Okay, well, let's take a look at Jet Airways once again. I reckon it's trading near day's highs. It's flying high. There you have it. So it is at around 318 now. So we're clearly seeing quite a breakout there for Jet Airways. We'll keep coming back to the stock, but there's just a bunch of others that I do want to address. And one of them perhaps is Just Dial as well. And if I can take this one up with one of our technical guests. Abhijit, can I come to you on Just Dial? We've seen strength come through, and there's been a considerable increase in open interest, which I believe is towards fresh longs, considering that up move in the stock. What levels are you watching out for in Just Dial?
Yeah, in Just Dial, a close up of 520, it can go to 540. So, I mean, I always had a target of 520 and 540 on Just Dial. So maybe that might happen in the next coming days. But then 520 is was the resistance, and that will. I mean, above that, it might go up by another 20 rupees.
Okay, and Hadrien, if I can come to you on Ujjivan very quickly. This one again has seen quite a surge. If you could, tell our viewers about the levels that they should watch out for while trading Ujjivan.
Yeah, absolutely. The momentum is really there in the stock. In fact, it is getting better and better each day. Volume participation is also getting better and better. So I think one should, buy the momentum and not refrain from it. The trend is definitely showing strength currently, and I think on the upside we could see 255, 260, in the near term. So if anyone is holding long on an Ujjivan, can definitely hold on to your long positions for a target of close to 260 levels.
Okay, well, it is 320, so I'm going to quickly take the closing strategies from our experts. Abhijit, coming back to you, anything on the indices or stocks that you're tracking with respect to BT, ST or STBT?
No, the same thing which I said. In fact, when I talked about Dabur, it was 384. It has already gone up by 5 rupees. And ITC also has gone up by one odd rupee. So BTST in them, and including Nifty futures, one can buy, and like I said, hedge with the 10,700 call short.
Okay, and Hadrien, the same question for you as well.
Yeah, so Nestle is really looking strong, and I think it is about to break out from a consolidation phase. So one can consider going long on Nestle. I'm expecting a target of 10,770 odd levels, keeping on stop loss at 10,320 odd levels. Okay.
HDFC Bank is not in a big gain today, but after that change yesterday, there's been a bit of a spurt, and HDFC Bank is now trading in and around the highest point of the day. So consolidation after a day of gains, small gains, but there is a bit of consolidation that is coming in for HDFC Bank as well. Between a bounce in Kotak versus the move in HDFC and ICICI, Abhijit, Phatak, if you had to bet on one of the large 3 or 4 private sector banks, which one would you bet on for a trade?
Mine is Axis Bank.
And why is that so? And what's the target?
Axis Bank can go towards 670 or maybe even 700, and it needs to just keep closing above 600. So that is as long as that is done, and it has not yet moved. In fact, it is just consolidating here, and it might make a move and towards 680, 700 in the coming weeks.
By the way, Jet Airways is 27%. I don't know by the time we shut shop, would it be 30% or 32% or thereabouts, because almost every single moment it's only moving one way, and that is higher. Difficult to give calls on such breakouts, but frankly, the last 4 days, Jet Airways has made a remarkable move. I think from 230 or 245 odd, this has just gone through the roof. It's just been the last 4 days, frankly. Actually, 3 sessions, not even 4. It's just been a remarkable move. GIP3 might actually give you a perfect indication of what Jet Airways has done. This is GIP4. I mean, the Bloomberg demand that I'm talking about, but spectacular move for Jet Airways. The other one, Agam, that's done really well, and we spoke to the management, is Apollo Hospital. 7.5%, the demerger of the pharmacy business, and that's, well, it's showing in the way the stock has reacted today. 7.5%. 12.54. It was actually a call given in the morning by one of the analysts on the opening show, and boy, the stock has created some wealth today. Mayuresh, if you had Apollo Hospitals in your portfolio, would you stay put with it because of this demerger news, or would you use this rally to get out of a stock which usually doesn't move so much?
No, so clear disclaimer, Neeraj. I do own this stock and I intend to keep this. So I think two elements to the whole argument here. I think one, I think on the standalone healthcare business, I think that's been doing pretty well. Now, even if you look at the Navi Mumbai operations, the Navi Mumbai operations have broken even on the EBITDA front. And what we're probably talking about in terms of how the contributions of old hospitals have been, specifically on the EBITDA front, I think it's a very, very encouraging sign with margins coming at 21-22% odd. Now, the demerger of the pharmacy business and the kind of expectations that one really has as the focus will now lay out on core healthcare services, I think you're probably looking at far greater earnings visibility happening on the core standalone business. Now the utilization levels have inched up 67 odd %. If you're talking about the average revenue per operating bed, that's almost 33,700 odd rupees, with the Chennai cluster contribution actually coming up at 44,100 odd rupees. A large part of their capex is behind that. Debt equity is very, very comfortable in my opinion at 0.85 for running an hospital operations. So again, I think there are synergies which will obviously keep on improving for the core business, and the demerger obviously will help the overall valuations of the stock as well. So I remain positive, and the disclaimer is something which I've already put out.
Okay, well, with that, I'll take a moment to let Mayuresh go. Mayuresh, once again, thanks a lot for joining us this afternoon and taking us through your views on the markets. But we still have our technical experts with us, so I believe that we can go through some more here. So, okay, let's pull up something like Grasim Industries. I know it's weak, and this is largely on account of fundamental reasons, as we have elaborated through the course of the day. It's down 8%. Hadrien, your view on Grasim Industries? I know it probably is a negative view, but what levels would you watch out for, and how does the risk-reward stack up if should one were interested in going short with Grasim at this point?
Yeah, absolutely. As you said, it is really looking weak. No doubt it's because of, the news that came out in terms of results. But I think it is the traders, theme to actually sell the weakness and buy the momentum. That's how you, play the markets if you're a short-term trader. So definitely, any kind of an up move on a Grasim should be an opportunity to short sell. I think on the downside, it still has room to slide towards the 765, 770 odd zone. So I think any kind of up move on Grasim should be used as an opportunity to short sell.
Okay, so that's the view on Grasim, and the other one I want to pull up is Ashok Leyland, because since the past 3 days actually we've been getting constant queries on Ashok Leyland. It's it's marginally in the red today, but we have seen substantial weakness on account of fundamental reasons. But it is trending well at around 106 odd levels. Abhijit, your view on Ashok Leyland, what would you do with this one now?
No, this continues to remain on the short side, and any rise is a short. Okay, I'm expecting something like 95 on Ashok Leyland in the near term.
Okay, I'm going to ask a difficult one before we wrap up. Abhijit, to what levels do you see Jet Airways going?
Just a minute, let me see the chart.
It's okay. I think all of us can go fatally wrong here, but it's still, we're just asking for an educated guess.
400.
400. Wow, interesting. Hadrien, you?
380.
Okay. Well, yeah. See, the point is the charts are showing that bullishness, and we can see that in the buying. I'm particularly interested in the kind of volumes and the delivery percentages. Actually, the delivery percentages might also be a bit low because the volumes would have jumped up so much that you wouldn't have the delivery percentages as much. But the number of shares marked for delivery would be an interesting one to monitor today. Any case, we'll talk about that later. First, the markets, 0.25% higher for the benchmark indices. The Nifty Bank leading the way. Mid caps and the small caps not quite there. And the small cap index in particular just lying absolutely flat. But I'm sure Agam will talk a lot about it. Let me talk about the large caps very, very quickly. Bring up the top gainers and losers in the session today. Adani Ports, couldn't quite fathom the reason, but up 4% today. Titan continuing from where it left off, about 3% higher. Kotak Bank bouncing back today, about 3% higher. And then the autos. So iShares, Hero MotoCorp, there was a Maruti in the fray as well. Good going. Bajaj Finance from amongst the rate sensitives doing okay. Technologies amiss from the list of gainers at the beginning of the day. Tech stocks were right up there. What about the losers? Grasim Although the reason, the top loser, Yes Bank 7.5, Indiabulls Housing Finance because of maybe this reason, down about 4.5 too. Typically when Yes and Diwan and Indiabulls, they tend to move in tandem the last few days. ONGC is corrected a bit, GAIL has corrected a bit, but frankly, the losers not so much. It's a day that's belonged to the gainers on the large cap space and the mid cap space. While the indices were flat, Agam, a bunch of stocks really flying around.
Yeah, absolutely. And Neeraj, I have more gainers than losers on my list. And of course, right at the top, it's going to be Jet Airways. Both our technical experts are expecting it to move in the range of anywhere between 380 to 400 rupees per share. And it has seen substantial gains in today's day of trade, as you can see on your screen here. In fact, it's up 26% now. So, well, it's likely to end at day's highs, and we've seen considerable gains there. But let's move on and talk about the other stocks as well. eClerx is the other one. This is a surprising one, not a very liquid one either. And that's seen a rise of around 9.3% too. It hasn't closed at day's highs, but a 9% gain, well, that's something that investors will take with both hands. Moving on to Adani Transmission, that's the other one. Adani Transmission also seeing a lot of strength. That's also up. Well, it's actually locked in an upper circuit of 10%. So clearly closing at a day's high. Moving on, we also have a lot of traction in something like an Ujjivan Financial. Again, Ujjivan Financial is one of those stocks which has been moving upwards along with the rest of the microfinancing space. But if you leave that on the side, let's talk about some other counters as well. And on the losing end, we do have, well, a considerable weakness in the stock, which is right there on your screen right now. We're looking at about a 10% cut there as well. And Vodafone for Vodafone India, and Page Industries is the other one that I'd like to point out, because Page Industries is one of those HNI favorites, and that's declining by as much as 8.5%. So, well, a whole host of stocks out there to keep an eye on. For now, we're looking at more gainers as compared to losers, and that's something that we're going to continue to track. But the moves, at least in the broader markets, have been extreme, both on the losing end as well as on the gaining end.
Yeah. Well, but an interesting day of trade, and well, I know we can't take our eyes off Jet Airways if you are a stock watcher really, but it's not a bad day for the markets either, 10,600. So, well, a bit of a continuity that we've had. Jet Airways ending 26% higher, clearly the stock of the day, but there have been a bunch of others as Agam mentioned. However, let's bring up the turnover first, and since the markets have closed now, let's bring up the turnover and see if indeed the volumes picked up. Well, Agam, they did clock the 30,000 mark on the cash side.
Right, yeah, so the cash, of course, the F&O side of things was expected because of the weekly expiry. But yes, cash, well, in line with what we've seen in the past couple of days, so that's not that bad. Let's pull out the contributors too, because I'm really curious to know about which of those stocks which have contributed to the gains. And Kotak Mahindra Bank, of course, and we have the HDFC Twins along with Axis Bank, so it is essentially the financial sector that has propped up the benchmark indices. But I have to say that Yes Bank is also right at the top, which is under pressure, and Indiabulls Housing Finance along with that. So yes, some stocks out there as well. So it's been a mixed day of trade for the financials today.
Yeah, and the market breadth is just interested because yesterday it was even Stevens of sorts. In today's session too, the declines marginally higher than the advances. But it's not been bad days, even though the market breadth has been slightly on the rough side.
Right. No, it certainly hasn't. And as I was suggesting, the gains that the gainers have seen are considerably more than in quantum as compared to some of those declines that we've seen.
Actually, if you can get the MRR.
Yes, absolutely.
The
yes.
NSE 500 MRR.
In today's day of trade, actually.
Would be interesting.
And well, that will actually explain that, at least as far as the gainers are concerned, we've seen much more activity around there as compared to some of those stocks which have been losing out in the trade.
But Jet Airways would be right up there, I would reckon.
Jet Airways would be right up there on the losing end. Okay, so there you have it. And as I've mentioned, it's Adani Transmission, eClerx, and Max Financial Services. Max Financial Services is the other very interesting one out there.
Post results.
And well, actually, a whole host of financials, Neeraj, in terms of the gainers.
Yeah, but very interesting losers as well today, Agam, I must say. Vodafone Idea, PC Jewelers I can understand, but Vodafone Idea 11%, and Page 8.5%. That's hit a bit of an air pocket of sorts. And Motherson second day on a trot now, down about 7%. So there's clearly pain out here for Motherson Sumi Systems as well. Actually, well, this might well be something that we can do on First Word tomorrow. Talk about what's ailing Motherson Sumi Systems. A bit of a sneak peek into our editorial piece tomorrow morning, maybe. Let's see. We'll figure out as the day closes. But interesting movers and shakers in the session today.
Yeah.
Final thoughts from our experts. Hadrien, if you just look at the The auto index, because autos whirl all over the place. Autos, ancillaries have been moving around. How does that space and that index look like? Because we started off the day and had a fair number of auto names in the list of gainers, even though some of them may have cooled off. How does the index look?
Yeah, so auto index definitely showing signs of accumulation. In fact, if you see the past 1.5 month, there is a considerable amount of accumulation that is visible in the auto index. So in terms of Maruti, Hero MotoCorp, Bajaj Auto, all these index heavyweights are participating. I think auto index still has a little more, has an important hurdle to pass by before we see a classic cup and handle pattern breakout on the auto index. So I think that is close to the 9350, 9360 levels, above which we could see a breakout. So I'm really hoping to see that breakout on the auto index, and Maruti should be the one to watch out for if you would want to pick one stock out of the auto index to trade long.
Okay, and Abhijit, well, if you have any closing thoughts, not necessarily on a certain index, it could be a sectoral index or perhaps a stock, anything that you'd like to mention while we close this trading day?
The only thing is this market is going to be stock specific, like you saw some stocks going down 8 or 10% also, so it's going to be difficult for people to select the stocks, so it's better to stick to the index or trade in stocks which have given a clear breakout or at near supports. So, but at the same time, the index remains a buy on dip as long as 10,480, 10,500 is held on Nifty.
Okay then, gentlemen, both of you, thank you so much for taking the time out and being with us today on Countdown and giving us your thoughts. Really appreciate your time and good calling really on some of those stocks. But with that, and keep in mind Jet Airways, that's something that everybody believes could do more. But with that, it's a wrap on this leg of Countdown from Agam and me and the team that put this show together. Thanks so much for watching.
Good news.